Hey folks, Dan Frio here, the rate update. Today is November 13th, 2020. Headlines today, and this is odd. We're in a pandemic. Everything else is going on. And one of the highlights on CNBC was, their business section was how people were flocking to beach areas and vacation rental areas and buying second homes. So I'm going to go over that and tell you the guidelines behind that, as well as going over what happened today in rates. So don't go away. We'll be right back. So there it is. Homebuyers are flocking to vacation towns. So I thought this might be a good introduction to, if you're looking to buy a second home, what's the guidelines? So let's go over those guidelines real quick before we get on to where rates are going for today. I just did an analysis on our rate calculator, and this is behind the scenes. So if you've never seen this before, this is how we actually scan all of the rates for all the programs that we offer here at Preferred Rate. But I put in, I'm looking to buy a $300,000 second home. I'm putting down 10%. You need minimally 10% down, only 10% for a second home. So I got a $270 loan amount. Go down through here, purchase, my credit score, and all the other jumbo. And we're looking for a 30-year fixed. What could I do if I'm looking for that second home just to get away? Right now, today, I can offer you and here's how you read my rates, guys. I apologize, I'm jumping over some things. Over here is the rate that we can offer, all right? Right through here is the positive means you'd have to pay points to get that rate. And over here is the dollar figure that would equate out to the points to get this rate on a $250,000 mortgage. A negative is actually a rebate check back to you. So you offer, you ask sometimes, how are you able to do a loan and it costs me nothing? Well, we raise the rate a little bit to offset that to get you a rebate check back. Okay, so let me break this down in its simplest terms. So I'm getting a $250,000 loan on a second home that I'm buying, and I'm putting down 10%. My rate would be, in this one, I would choose this, 2.875. I'm getting a rebate back of 0.071, so that equates out to $192. So basically, that rate is not costing me anything. Okay, what I'm seeing right now is a lot of people are shopping rates, but they're missing the boat when it comes to the costs. This is one of the big areas I want to address to you. Let's say, for example, you're competing and somebody comes back and says, you know what, I can offer you on that program 2.625. And you're like, Dan, that beats your 2.875. You bet it does. However, how much is that costing you? So you have to always check how many points, what's the discount points and the lender fees that it's costing you to get that rate. But in this case, I would get a 2.875 30-year fixed rate. My payment would be $1120 principal and interest, and I would get a rebate check back for $192. So you can get into a second home right here at 90% loan to value. That means 10% down. Pretty awesome product. All right, so let's get on to where rates are today. It's the headlines came out in the newsletter that I post each day is low rates no longer offsetting price gains. I did a quick little analysis kind of off the chart, and I said a $250,000 loan, what would be the difference if I got a 2.875 rate and 3.5%? That's a pretty big spread when it comes to that rate, because a lot of people are like, I got to buy today to get this done. Yeah, maybe, but don't jump into it and not like the house that you're buying. I mean, you could wait a little bit. Is it better to get the lowest rate ever in history? Yeah, but what I'm going to get at is on a $250,000 loan, if you got a rate at 2.875. But in next spring they're at 3.5. What would the payment differential be? $81 difference. Now I know $81 is $81, but don't lose sleep over $80 if you're looking to buy a house or do something. If you're looking to refinance, that's a whole different story. Rates are as low as they've ever been basically right now. Lock in, save the money as quick as you can and move on. I still have people on the fence at 4.5%, 5%. They're like, I really want that 2.5% when we're offering them 2.75%. Guys, don't be what's the penny pound foolish thing, whatever. But think about the financials of it. You can save $250 a month or $257 a month. You probably want to pull the trigger on that. And then if you do it at basically, like most of the time when you go through us, the costs are minimal. Let's say rates go down. I always tell people, if the rates go down over 0.5% in the next year, 2, 3, call me back. I'll do your loan and I'll waive all of our costs. That's my guarantee to you guys. So what's going on today with rates? Well, let's get on to kind of some generic charts. Right here is, I posted, and I apologize, I forgot to post this yesterday. This gives us a generic reading on where rates are. Okay, and then at the end of this video, I'm going to go over what my real rates are. So if they do an analysis throughout the whole country, these are where rates are. Okay, on a 30-year, they go break it down 30-year conforming. That's just a standard mortgage, a 30-year jumbo, and then they go into the government programs, 30-year FHA and 30-year VA. Here's where the rates are today. And again, this is generically a study over the whole country. And this is the one-day delta. What delta is the difference in 1 day. So rates are down 2 basis points since the day before. You add that 2 basis points to this number. So it's 2.87. I'm sorry, you take that off or add it back to see where we were yesterday. So it would have been 2.89 yesterday. A 7-day delta is 2 basis points up. So basically, it's things are pretty flat. You can see here, there's really not a lot of variation with rates. They're ticking by the 100th of a percentage. So nothing really there. But if you look over to this column here, this is a delta or a change since last year at this time. There's a dramatic change. Look, it's almost 1% across the board. So rates are 1% lower, most likely, than where they were last year. So if you refinanced or bought last year, look at doing something, because you're not that far into your loan that it will dramatically help you long term. All right, so now why do people come to my channel? Well, they come for this chart right here. What is this chart? Well, it's the mortgage-backed securities market. What is mortgage-backed securities? It is the number one vehicle that controls the biggest chunk or the biggest piece of your mortgage rate. It is a bond that trades on Wall Street that is the biggest determinant of your mortgage rate. Okay, so this is what's happening to the bond. And I always do this to make it make sense to everybody. We love green because green means the price of the bond went up. The more you pay for a bond, pay up, the lower the rate of return or the yield, the lower the mortgage rate. So we love when the price goes up. We hate red because as the price goes down, you're paying less for the bond. You're getting a higher rate of return. That means you're going to get a higher mortgage rate. Okay, so we don't like when that happens. So you can see on election day, we kind of had knee jerks, and we had a big move up. Up is good. But the funny thing is, rates really didn't change here at all. And then we came back down like I projected, and we actually went below where I projected, because I'm saying we should be right here on this, and I'll put a line right here, and I'll explain to you why. All right, so when I break down this chart, and those that follow me every day, I apologize, I repeat this every day, but we have new people join us every day. Because if you're watching me, you're interested in a mortgage, or you're a realtor, or you're a financial planner, or you're a mortgage advisor. But if you're in the market for a mortgage and you really see this, you're gonna watch me during the duration of your mortgage to see where rates are going. And then after that, you're probably not gonna follow me, because unless you're way into mortgages, which I don't see why you would be, you really have no need to follow this. But I hope you continue to follow me. But we chart this thing to kind of, so I can give you an educated ideas on where rates are going and why. Okay, people can guess. You know, what they say, the clock's always right twice a day. People can guess and say, oh, you know, I told you the stock market was going to crash. Well, you predicted that 20 years ago, and then it finally crashed. You know, that's not Einstein. But what I try to do is tell you what's going to happen, you know, tomorrow, the next 2-3 weeks, or the next month or two while you're in the process of a mortgage. Okay, so I chart things. I follow a bunch of leading economic indicators and inflation rates and employment rates and wage growth and all this other stuff. Kind of a geek like that, but it is what it is. So when we're following these trends, what we're looking at is a few lines. This line right here, and this line right here, and this line right here. Okay, these are what we call Fibonacci levels. This one right here is a short-term ceiling. So when the rates, you know, when this bond yield is moving or price is moving, think of this as you know, when you took your little kids to a bowl when they were tiny, you put up those bumpers. So you think of this as it's going to go up to here and boom and bounce back down and boom and bounce back down, but it's going to trade in this range right here. The Federal Reserve stepped in several months ago when the pandemic really hit, and they said we're going to buy these mortgage-backed securities and stabilize the price. So we're going to buy when needed and reduce our buying when we don't need to, and we're going to try to basically stabilize this thing to avoid huge hiccups, because huge hiccups in this market can really have ramifications throughout the whole country in housing. Okay, so this is the short-term ceiling and floor. All right, so now there's other indicators within here that we also follow. All right, there's this purple line right here, which is a 100-day moving average. So it's the average of all these numbers over 100 days. The black line is a 50-day moving average, and you can see that kind of briefly in here. The brown line is a 25-day moving average, which you can see in here. So they condense right there. And that's the sweet spot. That's where I'm saying we should be trading. So when we have a hiccup up here, I pretty much know, well, the market's going to give back and come back down to here. It's when we break these barriers that's kind of concerning. But because the Fed's doing what they're doing and everything else, we always come back normally to this range here. Unfortunately, we're not in normal times. If the coronavirus just goes bonkers and the flu season comes in, everybody starts shutting down their counties, cities, states, and whatever, we could have a whole debacle on our hands. But if there's a coronavirus cure, then things could look better, and then mortgage rates at that point will go up. Okay, watch my videos. If you would track my videos on a daily basis if you're really interested in this, and I explain to you on buying stocks, why people buy these particular bonds, and so forth. So right now I'm saying we should basically be steady in this range here. There shouldn't be anything that really deviates from that. So mortgage rates haven't really changed. I'll go over my rates here in a second. You can see in here low rates no longer offsetting price gains. They're saying house prices are going up and up and up and up, and it's basically the low rates are no longer basically helping people get into those homes. I disagree with that, but that's for another day. So now let's get on to where my rates are today. When we're breaking down rates, there's what's called conventional financing, which is the same as conforming. Then there's government-backed or government-guaranteed loans. Those are FHA, VA, and USDA. And then there's jumbo mortgages. So my previous videos for the last several months, I've been going through and giving you a whole spreadsheet of what each interest rate is based on different variations in scores, what we call loan to values, if you're getting cash out or not, and so forth. But I've been trying to limit my video timing so more and more people watch it and don't click out of it because I'm boring them to death. So let me explain this page right here, and it kind of follows suit right down through. This is my conventional rates for today, and there's two variations of this. If you're looking to purchase a new home, or do what's called a rate and term refinance. What a rate and term refinance is basically taking your current loan balance and refinancing it to a different rate and or term. You're not looking to get any money out, okay? And then you'll see down here, this says cash out. This over here is your credit score. 740 is the top tiered score. If you have lower scores than this, your rate's going to be a little bit higher. If you have much lower rates or scores than this, your rate could be much higher. So there is no one rate for every different criteria, meaning different kind of property types. If you're looking to cash out, what your credit scores are, what we call the loan to value. And loan to value is this number right here. So loan to value is basically what it says, loan to value. It's the loan amount divided by the value of the property. So in this rate right here corresponds with a 740 plus credit score and an 80% loan to value. My rate today is 2.75 with an APR of 2.852. And I'm not going to go over APR every time. I'm just going to go through the rate, and you can see the APR over here. The criteria behind all this is a $250,000 mortgage on a single family property that's owner occupied. Okay, those are the backgrounds of these numbers. If you're looking to cash out, the credit score is 740 at a 75% loan to value. The rate is 2.875. You can see that rate goes up a little bit because you're cashing out. Okay, and this is rate and term of purchase. So now we go down to my 15-year. 15 years broken down the same way. It's 740 credit score at 80% loan to value. Purchase rate and term is 2.25. APR 2.47. And then again, the cash out, a little bit higher in rate. That rate is 2.5%. 15-year cash out, $250,000 mortgage, 75% loan to value, primary home, owner occupied. All right, so that's the rates for today on the 15-year term. Let's get to the government programs. My government programs are FHA, VA, and USDA. Let's break these down on why you would go with one of these. Okay, if you're a veteran, obviously you're going to go with a VA loan. This is by far, you earned it. God bless you. Thank you for what you did or you're doing, and you earned this benefit. If you're looking to buy a house or refinance, you can go up to 100% financing, so 100% of the house's value. At a 740 credit score, my VA rate today is 2.5. USDA is basically you're buying a rural property. You don't have to be buying a farm. Actually, you can't be buying a farm under this program, the one we offer. You're buying a house out in a rural area. Same parameters behind this. The rate on there is also 2.5%. If you're not buying one of these, and you can also go with an FHA loan. FHA loan requires 3.5% down payment. So if you're not a veteran or you're not buying in a rural area, a good program with a limited down payment is the FHA program. So if you're buying a house or refinancing, you can go to 740 credit score, up to 96.5% loan to value. So that means a 3.5% down payment. That rate is also 2.5. These are all my 30-year fixed rates. Now the program that we're known for, our jumbos. We have $1 million loans, 75% loan to value, 740 credit score. My rate is 3%, 30-year fixed, not an ARM, not an interest only, not a teaser that doesn't move. It is a 30-year fixed rate, 3%, 30-year fixed rate on $1 million loan. We do 1 million, 2 million, 3 million. There's different caveats between each one of them. That's why I need you to call me so we can go over yours specifically, what rate you qualify for. So those are my rates for today. So here's the challenge I have for you. One, please give me a thumbs up. Don't forget to subscribe down below. Click the bell so every time I post a video, you get an alert. In my titles, I try to not make them clickbaity. I try to give you information on what my video is about. So many times I read a title, I'm like, oh, that's intriguing. I click and it has nothing to do about the title, but it got me to click. So I hate that, and I try not to do that to you guys. But my challenge to you guys is if you're in the mortgage process right now, you're building a home, you have a closing in 30, 60, 45 days from now, or you're looking to refinance, and you're in the process. So you're in the process or you're not in the process. If you're in the process, do this. Send me what's called your loan estimate. By law, we have to send it to you within 3 days of you filling out an application. It's going to go over that whole loan. It's going to give over the value of the property, your loan amount, your rate, your fees, everything broken down to a T. What I do is I go through it, and you send me those, and I get probably 10 or 15 a day. I run through it with my red pen, and I write on there what I can do. Very rarely can I not beat what you have. So let me break it down this way, though. It's not like, okay, their rates, and I'm going to make it just simple, 3 with $3,000 in fees. And I come back and I'm like, well, I can get you 2.5, but $8,000 in fees. No. Here's what I do. I'll either get you the same rate with lower fees, the same fees with a lower rate, or in most cases, I'm getting you a lower rate and lower fees. You got nothing to lose. I'm not pulling your credit. I'm not doing anything. I'm taking your word for it as long as, because you got a loan estimate. You're in the process right now. You've already been most likely approved at that company just right out of the gate. So they really haven't worked too much on it, but they have your data. So that's what I ask you to do if you're in the process right now. If you're not in the process and you closed a loan a year plus ago, your rate's probably over 4%. Even if it's over 3.5%, please email me a copy of your mortgage statement. The only thing I need other than that, because your mortgage statement is going to give me your address, which I can look up the value. It's going to give me how much you owe on the property. When I look up the house, I'll tell, I'll be able to figure out what kind of property it is: condo, single family, a 4-unit, whatever. The only thing I don't know is your credit score. You probably know your credit score. If you don't, go to a sponsor of the show. It's called Credit Scores, plural, creditscoresandmore.com. Click step 1. It'll take you 3 minutes. Let me know what that score is. There's no strings attached. It doesn't cost you anything. It's a free service. So you send me your mortgage statement. What can you do, Dan? And then I'll probably ask you a couple questions because I want to narrow it down. I want to give you a quote that you can go take to the bank. That's kind of I didn't think that's kind of a pun. But you can count on. I don't want to deceive you and say, I can get you 2.75, and then something comes back, I can get you 3 now with 5,000 fees. I promise you. I'll do everything in my power not to do that, but I'm going to need some questions answered by you. Here's how I need you to, if you can, email that stuff to me, call us, do whatever you need to do, and I'll show you where to go to do all of that. The best way to find us is on the web. So go to therateupdate.com. Right here, you can scroll down here. This gives you our 800 number, all of our social media. If you go into this section, we give you basically a little tour of the office and the team, and you can see what our beliefs are right here. And then if you go here, there's a whole slew of things you can do on this page. You can get pre-qualified for to buy a house here, get pre-set up to refinance. You can apply for a loan. You're like, I trust you. I need to do something. I've been searching around and I just want to get this done by you guys. Hit the apply now button, click it, and move on. We got one other tool in here that we just added this week. It's a home valuation tool. It's free to you. There's no strings attached. I don't sell the data. It'll give you all kind of information on your property. So you plug in your address. It'll give you some generic information. If you put in your email address, it will then give you all kind of public record information on your house. Does it make sense to refinance? What refinance options you have? Can you rent out the house? What's the property value? When did you buy it? What's your rate? You might even not remember what your rate is. It'll tell you most likely what your rate is off of public record. It'll give you a ton of data, and it's unbelievable, and it's free. But if you want to reach me, the best way to do it is email me. My email is D for Dan, Frio, which is Frio, at preferredrate.com. So that's it for today. I want to thank you all for watching. Have a great Friday. Have a great, safe, healthy weekend, and I'll see you Monday. Take care. Bye-bye.